Okay, well, we were talking about how the Canadian stock market is at all-time highs. Energy stocks have lagged, and part of that is it's been a mixed story for the price of oil. I want to bring in longtime energy watcher Rob Thummel, who's a senior portfolio manager and managing director at Tortoise, to talk a little bit more about the moving parts in the energy market. Rob, it's great to have you with us. First of all, just starting this week, sentiment seems a little bit mixed. What has been driving the oil story to start the week?
Yeah, John. So I think probably start the week. It's really a couple things. It's OPEC bringing back supply, as well as what's going to happen in this with these tariffs, and how's that going to impact the global economy in terms of GDP growth, both domestically as well as globally. And so I think obviously we're seeing oil prices they're about flat today, maybe down just a little bit. But we've seen a nice little rise in the oil price over the last couple weeks as a result of an improving outlook for the global economy, tied to probably a less, I guess, less tariffs than really were expected in the long run.
And I guess going back to sort of the demand-supply story, walk us through what you actually see in the numbers right now, right? There's all sorts of stuff that gets thrown around out there, including sort of constant conversation around what OPEC's game plan is with their current production. But what does the supply-demand picture look like to you?
Yeah, no, that's a good question. So I think what's happening from an oil perspective, the global oil market is oversupplied right now. It's going to be oversupplied in the second half of the year because OPEC Plus is bringing back volumes to the market, oil volumes back to the market. They've accelerated the pace at which they're unwinding some of their previous cuts, and that's going to result in an oversupplied oil market. And typically when you have an oversupplied oil market, inventories rise and then prices fall, and that's exactly what we've seen.
Got it. And then I guess in terms of some of the geopolitical factors to watch outside of tariff, I mean, we're talking endlessly about tariffs right now and trying to put those pieces together. But what are the other geopolitical moving parts that people have to be watching when they're trying to figure out the story of energy right now?
Yeah, fortunately, it's been very quiet geopolitically. The biggest geopolitical risk to focus on still is Iran and the Strait of Hormuz, and any implications of a closure of the Strait of Hormuz, which we don't think is going to happen, or just a lowering of the export volumes that come out of Iran on a daily basis. That could cause oil prices to rise. But right now, none of that. We don't see any of those geopolitical risks really rising that high.
Now, it's interesting to see the story of oil playing out as it is at a time when people are definitely talking about power demand quite extensively, especially in the stock market tied to the AI boom. So when you look at that part of the equation, what do you see right now?
Yeah, John. So, Tortoise, we think electricity is the new oil, and this is a big change. We've been studying the energy sector for 30 years. I have been 20 years at Tortoise. Tortoise has been around, focused on the energy sector for that long period of time. Electricity, haven't talked about a lot, right? Well, why? Well, it's because you've had flat electricity demand in the U.S. for the last 20 years. But now everything's changing. You mentioned it. AI changed the game. We're going to now start to have accelerated electricity growth in the U.S. and probably Canada and likely globally. And so that's why we think electricity is the new oil. It's going to be the growth driver going forward, and there are a lot of opportunities as a result of that.
Yeah, so because there's often a comparison made when oil's in the conversation about the demand for electric vehicles, and it sounds like we should be thinking differently about the electricity demands beyond vehicles, just the overall demands for that AI boom. Is that's what leads you to the electricity being the new oil?
Yeah, absolutely. So there's going to be massive electricity demand really over the next several decades tied to AI. It could industrialization, manufacturing, EVs. All of these captured together are really going to expand the amount of electricity demand dramatically. It could be over 1,000 terawatt hours of electricity. You say, oh, what does that mean? So think about it this way. That's like 140 Philadelphias, basically. Philadelphia, the city of Philadelphia, basically times 140. That's how much 1,000 terawatt hours of electricity demand is going to be. I live in Kansas City. It's like 240 Kansas cities or something like that. It's a massive amount of electricity that's going to be needed to be generated. Really, not just in the next decade, but really in the next 5 or 6 years. And so that's why we're so excited about it, Tortoise, and it creates opportunities to invest in natural gas, nuclear, because those two are going to really be the primary fuel sources to generate this electricity going forward.